Everyone, hope everything is going well. I've had a vacation for the past week, was in Seattle, and now I'm back and getting ready for craziness to ensue in the markets. Probably to the upside and then the crash, the volatility. And we already saw a mini crash earlier this month and the markets rebounded. And I was buying at that point, and I was doing a few videos when all that craziness was going down. Now I have more time to do videos. Now I wanted to look at the VIX, which is crazy, right? Just about a few weeks ago, the VIX was at 65 in the morning. I think it was on that Monday morning, if I remember correctly, Monday or Tuesday. And right now, the VIX is at 14.80. Okay, it's looking at, like the 30 days, volatility expected move. The shorter term volatility is you could look at it more like a 7 day or 9 day. And it's the VXST. Not many people know about this, but this was wild. It hit the 70s, it looked like. And right now it's under 13. Now, this is not the low of the year. The low of the year actually went to below 10, which was quite interesting. Maybe let me look at it from like the last 3 months. 3 months, look at it. Okay. But yeah, 70s, and you can just see this move. Huge contraction in short-term volatility. They're showing no fear whatsoever. And the interesting part is the VXV, it hasn't collapsed to like this year's low. Okay. It's at what, 17.81. Some people argue, well, the VIX isn't at all-time lows. It's not at what, 12.5 around there. That's fair game. Though, if you look at the change in the VIX, for instance, it went down minus 2.8%. The VXST went down almost 10%. So the shorter term volatility, it contracted big time. This contracted over the last 30 days, volatility, okay, 3%. VXV, let's look at over the 3 months. There's virtually no change. It wasn't even a percentage point decrease in more of a longer term volatility. What is this telling you, right? Throw your political opinions out, okay? Whether you're a Trump guy or you're for Kamala or you don't like either. This is saying, okay, 3 months from now, we're talking about election time, a little post-election. This volatility is staying constant. It's telling me, in my opinion, like you could look at options 3 months down the road. I think people are buying more protection than not compared to shorter term volatility. So these high frequency traders, they're very bullish short term, but longer term picture is based on this volatility index, the VXV. It seems that they're pricing in more volatility, more uncertainty, and I'm definitely taking a note because I am a guy that is involved in the options markets, as I've stated. And lately, what I've been doing is I've been slowly, as the markets keep on ripping, I just buy like XSP, which is basically the S&P 500, but it's a CBOE option. So instead of the SPY, buy the XSP. It's cash delivery, so I don't have to worry about, oh, I need $50,000 in my account for this particular trade if my option gets triggered, right? I don't have to worry about it. It's cash settlement. Now, I do think with the margin account, where you most people do with options, well, you need to put 30% down. So instead of 55,000, just take 55,000 divided by 3. But I don't want to get too much into that. And once again, anyone dealing with options, there's a lot of risks. So please do your due diligence before getting involved in options. I'm not telling you what to do. I'm just telling you what I'm doing. And I could totally be wrong on this. The markets could go in unexpected way and I lose everything, right? Options are very, very risky. Okay. Now, I have been buying also the SPX. So what I'm looking at is over a year from now, the December contract. I could even take a look at. I'm not telling you what to do, but all right, let's look at SPX options, okay? There's a little more liquidity in SPX, but it's more how should I say the now notional value is much more than the SPX, right? You're taking this index and you're basically timing it times 100. So this is like a $550,000 like notional value. And what I'm doing, just as a disclosure, what I put on the other day, I may be trading around it depending on, okay, if we get a vol spike in the next few weeks, I may unload and get back in. Not exactly sure. I have to assess where the markets are at. But let me just look at it right now. Let me look at December. Let me look at the strike price. I want to look at the strike price like 4,600. That's because that's what my strike price is from my memory for the December is a put. So like 4,600. So it's I think right here about. So I bought a put the other day. I don't was it Friday or Thursday? One of those days I bought a put and 4,600 put. And ultimately, these options, I believe, will go higher in a market meltdown situation. I do believe it's going to happen. And I'm putting down, this is a lot of money here, right? But I only did it when the markets just ripped the last few days. I do have lower option values like the XSP, but that's a different story. And once again, this is a lot of money for some people, putting 11 grand on an option, but it's a long time from now, right? Okay. Long time from now. And ultimately, I don't know if they even have where the option was at the other day, but if you look at this, because this vol spike from the other day, this was at 221. Okay. And what was quite interesting when the markets were like tanking, this was like last year, right? Before like all of that stuff that was going on, or like when that Middle East stuff went down, this chart is saying that it was like close to 500. So 500 times 100, talking about a $50,000 option. Okay. Now, granted, I was buying it like here when vol is a little lower. Anyways, like 110 around. This spiked. Just see how crazy what can happen in a volatility move. This is why don't short options anymore. Because what if you have a move like this, okay? It was 111 end of July. And with that vol spike, it went to 220. Granted, we don't see those moves that often. But within a span of basically a week, if someone had bought that option and sold closer to the top, of the range. It could have been a double move, just like that. Now, I didn't do that. Should I have? Maybe. I was playing with the Russell options instead. And I am trading around it here and there. Right now, I'm just holding it. But from a couple weeks ago, I'm underwater in that, but I made money on those other trades. So right now I'm underwater looking at the net, not by too much. But I'm looking at time as my side, December of 2025, and I do expect vol to increase. Volatility, in my opinion, is going to increase. Why is vol going to increase? I believe it's going to increase because of the election coming up. We don't know if Trump's going to jail or not, right? What if they decide, hey, we're going to put this guy in jail, or there's going to be a process to put him in jail? What's that going to do to the financial markets? Are markets going to puke in September? That's what Martin Armstrong's computer AI is predicting. It's predicting craziness like the second or third week of September. What's happening then? I think I'm taking days off in the middle of September because I have to take days off. And I'm like, hey, I think that week's going to be crazy. And Trump is supposed to be what? Put in jail or some announcement September 18th. Okay. I think I'm going to take that day off because I think trading is going to be insane. Now, can I get into my account? I don't know. Like every account was out that day. Schwab, Fidelity, everything. So it is what it is. I just do find this interesting that this just spiked up. It doubled because of the vol move, and now it's contracted. Just look at it. Like we're talking about crazy volatility moves. This is like 729. This was like, or 730, 111, where it is right now. Spiked on that day, 84, 85, 86, whatever it was, to like 220, doubled. And within 10 days or 10, 12 days, we're back to where it was on 731, basically. Okay. That's where we're at. It's basically not moved in the past 3 weeks. But I do find that very interesting, though, that okay, this is going nowhere. To get anything from this video, the 3-month volatile index is going nowhere. Short-term vol is contracting big time, 10%, but the VIX is showing, okay, not that much. Yeah, there's going to be, lower volatility, lower expected move in the change of prices, but further out, I think that's when crazy stuff is going to go down, especially in the economy too. Recession, we're looking at the issues with commercial real estate. Yeah, it's going to be wild, everybody. So I'm buckling up. It's going to be turbulence. I was on a plane last night. It was just turbulent getting back to Chicago to stop in Indiana because the guy couldn't see the ramp or of where we are supposed to arrive at the airport at Midway. So, yeah, wild stuff. Wild, wild stuff. Anyways, let me know your thoughts about this. I do see a sweet spot in the VIX. I do expect a crazy move to the upside in volatility. It's going to be bumpy. Part of it's going to be geopolitics. Some of it's going to be the election. Some of it's going to be because of commercial real estate and the problems we see there. Anyways, let me know your thoughts and I'll talk to you later. See you. Bye.